Deven Choksey joins in. He's the managing director at DRChoksey Finserv. Deven, hi, good morning and thanks for joining in. It is really a momentous day, week, month for the market, right? Fresh milestones are being hit. But if you had to create a shopping basket now of stocks, either large or mid-cap, where there still seems to be some more valuation headroom and where growth prospects are looking good, what would your list look like now?
Hi, good morning, Sonia. Well, I think the list would start with the particularly the large banking and financial companies, including the NBFCs, largely because of the fact that as we see the growth in the economy unfolding and unfolding at a rapid pace, some of the larger institutions who have got ability to lend bigger sum of money to the borrowers, they are the ones who are likely to be, I think, the biggest beneficiary. Be it likes of Bajaj Finance in NBFC space or be it SBI, HDFC Bank in the banking space, who are having the larger AUMs, I think are likely to grow and grow bigger in next 3.5, 4 years time. Most of these companies are actually reporting growth in excess of around 20% from the AUM growth perspective. Bajaj Finance kind of company continues to clock at around 30% plus rate of AUM growth on a month year-over-year basis. So from that particular point of view also, I believe that I think these companies are very well positioned. Not to forget one more thing that I think they are also having some of the larger franchises under them which are listed, and they are actually I think generating monetization abilities for these companies. So this is one sector which we like I think from the investment perspective even in this market because valuations are not very expensive. Otherwise, I think consumable or consumer segments discretionary space, particularly I think the auto ancillary remains one among the favorites. Of course, I think most of the stocks are adequately priced today, but some of the auto ancillary companies could possibly give relatively better return going forward. And last but not the least, I think some of the mid-tier IT companies which are in engineering R&D list, engineering R&D space, and on some of the niche areas in the auto and aviation space, those companies are reasonably looking sure from the point of view of reporting around 25% kind of CAGR growth in next 3 years' time. So we selectively buy some of these companies, even though some valuations are at a higher level. But I think yes, any corrective market, they give opportunity to buy into some of these companies.
No, got that. Deven, hi, morning. Want your views on Maruti, which I'll get to in just a bit. It was a big mover yesterday, right? 7% odd. But I want to start by asking you about your thoughts on on what SEBI expert panel is likely to recommend a lot size increase and we sort of just to curb F&O volumes. I think the really negative thing would have been if one of the suggestions was, which we don't know if it is there, but it's not been reported yet, is to sort of remove contracts, themselves, instead of sort of having expiry on one day. Given what we've seen so far, and we don't know if this will go through or not, what's your sense? Stocks like BSC and some of the broking stocks which have done very well. Deven, go on.
Yeah, Prashant, good morning. Well, I think I have seen the derivative market since the birth, I think, and we have probably, I think, seen how exactly the entire derivative market got structured with a minimum lot kind of applications. I think we have lived this particular era. Today, the time has come wherein I think you need to free this market. I think there should not be any requirement for any market lots. I think if you want to actually indeed curb the speculation, the better ways are available today. Like I think you have underlying portfolio. You cap, I think, the speculative activity to the underlying portfolio. So that at least I think you will not see the manipulation in the market lock, stock and barrel, which we are currently seeing in some of the smaller and mid-sized companies where probably these companies are quoting at a valuation of 100, 150, 200 times price earning ratio in some of the cases. I think that is where probably the corrective actions are required to be taken. You look at Nifty 50 baskets of companies, you never find, I think, irrational valuations in these particular companies, largely because of the fact that the derivative market is active in those companies, and that is where probably I think it's a leveler, as I see. I think instead of, I think, tweaking around with the market lot size and creating a roadblock like this, where the volume is threatening to get shifted to, I think, the Dabba trading, which is a nuisance. I believe that I think this particular subject has to be, I think, taken a little bit more seriously these days now. Maybe I think we have lived with the market lot concept. It is now time to peg the entire derivative business, I think, along with your investment portfolio. you already have every stock under demat. And I think it is easy to, I think, match investment portfolio to the exposure that one takes, I think, in the market. It will automatically restrict the market practices. At the same time, I think the risk management also will be more prudent than what it is currently.
Deven, I wanted your thoughts on the IT stocks because tomorrow onwards we'll start talking about them since TCS and HCL Tech are coming out with their numbers. Ahead of that, would you buy into any of the IT names now?
Well, I guess I think the two or three more important points I think which we will possibly I think want to listen from the company's management and the commentary coming out. On one side, I think we see probably the downtrend in the business is getting arrested. So which confirmation I think which we want to have it from the companies, if at all, I think that is the reality for across the board. I guess I think the larger companies, TCS, Infosys included, I think have been winning some of the long tenure contracts with a larger size. I think this is very, very significant because that gives you a sustainability over a period of time, I think, as far as the business aspect is concerned. Couple of things personally I am also observing how significantly they are changing their business model from typically a code base or the coder company, I think, getting into the computing space. If that is a approach that they are adopting, then possibility of I think you seeing the business model giving better results going forward, particularly in form of I think larger contracts coming in from cloud computing space, contracts coming in from the AI space to these companies. I believe that I think valuation wise, they are not threatening, but they are not expensive. From a perspective of looking at higher growth and the re-rating in the stocks, I think one would like to see some of the confirmations on the observations that at least I've put across, and I think the research that we are carrying on the subjects.